economy crashed. I can't predict that. I can't predict the weather.
I can. I'm a Doppler fucking radar. You took something and you didn't give it back. Then banks screwed you over. Take your pick. Either way, you lost. But I made more money during the crash than before it. You can too. You just gotta stop lying to yourself and ask, what did you do wrong that your family lives in a motel?
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. Guys, we got a big show. We have a lot to talk about. Our pattern targets were hit across the board on a lot of these indices. S&P futures just got to 61.11, a new all-time high on Friday, entering that danger zone for reversal. So, of course, I posted a short on the S&P futures. That's down 30, 40 points today at the lows. We'll see if that holds up. But we also had NASDAQ hit key resistance. The Dow hit key resistance. We got to look at Bitcoin's uptrend, ensure that it's still intact. So there's a lot to cover from the TA perspective. But I want to take a second and talk about a couple of things. First thing is the non-farm payrolls came out last week. Since my last video, non-farm payrolls came out, beat expectations, of course. I think expectations on Bloomberg, the consensus was 220. I think it came in at 227, thereabouts, beating expectations. Now, the thing is, the quarterly census employment and wages report came out as well, which also comes from the government, but has multiple data points, as well as a household survey came out. So we had the non-farm NFP, it's called. NFP beat expectations, but Anna Wong, chief economist from Bloomberg, also pointed this out before the release. Based on the QCEW, you have to subtract 100,000 jobs. That's the average number of job revisions per month from whatever this number is. Number comes out 227. It was actually 127. Why is that? They use something called the birth death model. They use a bunch of different metrics. The response rate is horrible on non-farm. It's a way of gaslighting the people, gaslighting Wall Street, and Wall Street wants it. They want to be lied to, right? It's like an abusive relationship. They want to be lied to so they can pass that on and lie to you and get more money flowing in and talk on the media and talk about how great and strong the economy is. Yet when you look at non-farm payroll numbers versus the QCEW versus household, private payrolls are shrinking. This is also why unemployment went up to 4.2%. Now that is 8 basis points up off the cycle low of 3.4%. And remember, every single time in history, you've gone up 6 basis points and we're up 8. You've gone up 6 basis points. You've had a recession every single time. Lee, unemployment animation, please, sir. Looking at this, guys, Lee, go ahead and highlight the recessions in red. The black wave is unemployment. We had a 54-year cycle low of unemployment for this stimulus economy that we've been living in. So the black wave is unemployment. It picks up during the recession. It peaks after the recession. The unemployment indicators are undefeated, as well as a 3-month, 10-year yield telling you the recession's coming. Again, paper tiger. I bring this up all the time because it's important to understand. One more, and then we're going to go over some new material. Lee, throw up the Bank of America, Merrill Lynch, my former employer, SOM rule chart. So guys, look at this. Highlight the column in red, please, Lee. Every single time since 1953, the SOM rule has triggered. The economy was already in recession, not about to be in recession, already in recession. Again, we triggered in August. You're already in recession. Now, I want to dovetail this to exactly where we are right now. I highly recommend, here's a homework assignment before the next video, guys, so we can talk about it in the comments. We'll be talking about it on the Discord as well. We can talk about it on X, but I highly recommend you watch the HBO movie Too Big to Fail. It has actors playing the parts, but it's all based on actual events. I hadn't seen the movie in about a decade. I rewatched it yesterday. It's on HBO. So if you don't have HBO, rent it on Prime. It's like $3 or $4, but it's the GFC, what actually happened. And I want to juxtapose this for you with where we are now, because what is Powell saying right now? Well, we can be cautious. We can take our time with the rate cuts. Remember, Powell has to signal to Wall Street and to the economy, to the American people, because we are the economy. What 70% of GDP is us consuming. So he has to signal to everybody, everything's okay. The economy is strong. As a matter of fact, it's so strong, we're going to be cautious about rate cuts. Let me tell you a little dirty secret. He's going to keep cutting, just like we went over last video, why he's going to keep cutting, even if inflation goes up, because of what happens in the deflationary bust when everything starts coming down, right? That's why he's going to keep cutting. But he has to say that because he's trying to slow the stock market. The stock market is making new all-time high after new all-time high. We have record investment in the stock market based on household allocation to the stock market. We have the most overvalued market in history versus GDP versus the Warren Buffett indicator, as well as, guys, we finally took out on the Shiller PE to become the second most expensive market in stock market history, taking out 2021. So in the movie, you'll see how Ben Bernanke handled this as well. Now, Lee, go ahead and play this clip. Actually, let me set the clip up. So remember Ben Bernanke at the Fed. No recessionary forecast. The economy, we're looking for everything to stabilize. We see decent growth ahead. He kept gaslighting the American people, gaslighting the Congress. As a matter of fact, we have that news clip you guys have seen multiple times about whether or not we're in a recession. This is after everything's starting to hit the fan on Wall Street with Bear Stearns failing, Lehman's failing, Merrill Lynch, where I was going to be next. So this was Ben Bernanke gaslighting Congress and gaslighting the American people. Lee, roll that clip.
We've got many economists, one coming this afternoon from Brookings, who says that there is a recession. Are we in a recession
We
now?
are in a serious slowdown in the economy, which has very significant consequences for the public, and whether it's called a recession or not is of no consequence.
But what was happening behind the scenes, right? So Ben Bernanke is telling everybody, well, whether you call it a recession, it's not important. We're in a severe slowdown. Behind the scenes, and you'll see this in the movie, they timeline everything in the movie for you, set up everybody's names. Behind the scenes, he gathers all the banking heads from around the country, whatever it was, 7 or 8 banks. You had Thane from Merrill Lynch, where I was. You had Jamie Dimon from JP Morgan, John Mack from Morgan Stanley, Pandit from Citibank. So you have all the guys there, right? You have all the guys there in the room with the Treasury Secretary. Paul Giamatti plays Ben Bernanke. And then he says this to them. The same time he's telling the American public everything's going to stabilize. It's a slowdown. What is he telling the bankers? All the head bankers of the country's biggest banks. Lee, roll that clip.
I spent my entire academic career studying the Great Depression. The Depression may have started because of a stock market crash, but what hit the general economy was a disruption of credit. Average citizens unable to borrow money, to do anything, to buy a home, start a business, stock their shelves. Credit has the ability to build a modern economy, but lack of credit has the power to destroy it, swiftly and absolutely. If we do not act boldly and immediately, we will replay the Depression of the 1930s, only this time it will be far, far worse. We don't do this now, we won't have an economy on Monday.
Geithner?
That's right. Ben Bernanke saying we're going to have a recession, a financial collapse greater than the Great Depression, something studied severely. Did Ben Bernanke ever say that to the public at any time? Of course not, guys. As a matter of fact, Ben Bernanke gets a Nobel Prize after overseeing the greatest financial collapse, perhaps, in world history. He gets a Nobel Prize. He was such a bad Fed chair, that Obama even nominated him for another term. He served the term under Obama as well. Isn't that amazing how that works out? I mean, it's really fascinating, right? So to the people that matter, the people that control the financial system, we're going to have a collapse. To the American people, it doesn't matter what you call it. It's a severe slowdown. Doesn't have to be a recession. So understand, it's the same thing that's happening right now. The fake job numbers being revised down 100,000 a month. Unemployment ticking up. The setup, we went over it last video and many other videos as well. The setup with unemployment, the setup with inflation is the exact same. Now it all comes down to how much more euphoria can we squeeze out of the market to run the prices up a little bit more before the collapse, before the major sell-off. And again, getting at least a 50% decline in the marketplace. Again, went over those targets last video. So we're going to go ahead and cover all this. Guys, next video will be my last video on YouTube for the year. I'll be active on X. I may even post a video update on X, but I'm going to take the last 2 weeks of the year off because I got a lot of education stuff to put out on the Discord, to put out on the website. So follow me on X. My name on X is Market Canary. It's there pinned in the YouTube comments. It's in the YouTube video description. Give me a follow and I'll probably give you guys a nice little video as a market update because next week's video will be the last update on YouTube for the year. Got to get the X followers up. I need my backup in place in case anything bad ever happens on this channel. Without further ado, Lee, let's start the show. All right, guys, be sure to check out our website, marketmakers.trade. It is a fantastic place and community to join. Here's the website on my screen. You can find out everything about what we offer, the 2 different packages, the Discord package where you can communicate directly with me, the staff. We have a fantastic community. On both packages, the website and Discord, you do get all of our TA, our trades, our live streams. It's all there for you. So check out marketmakers.trade. You guys want to trade these markets? Check out the 2 fantastic sponsors, SimpleFX and Bitunix. I'll pin those details in the video description. You do get the special market makers bonus for both of them. Let's look at the VIX. VIX is still in the rally territory, nothing new. Actually, let's backtrack. Let's look at the Shiller. Shiller at 38.88, again, taking out 2021. Significant for a couple of reasons. Every time the Shiller's been above 30, you've had a crash. But at 38.88, we've now exceeded 2021, where again, we covered this last video, but at this exact same identical valuation, Bitcoin fell 77%, S&P fell 30%, NASDAQ fell 40%. What's the dollar doing? It's still stuck in our Wyckoff fractal range here at 106, still hovering on support, just sitting here, nothing to go over. Went over this in detail last week, the unemployment, civilian unemployment, the numbers from the government, the false landing, the soft landing they all want to talk about. This is the mid-90s. It's literally the exact opposite of the mid-90s. The mid-90s unemployment fell from 5.8 to 3.8. Unemployment declined. 3-month 10-year yield did not invert. The unemployment indicators did not trigger. That is why you did not have a recession. Now, the exact opposite situation. Getting above, we are above the 20 weekly moving average. Again, every single time you've been above it, you keep above it. You keep above it until you hit your cycle peak. Just like when you're below it, you stay below it until you hit your cycle low. You can go back in history and look at this. This is all the way back to 1978 when I was born, just here on the screen. Guys, let's talk about the Santa Claus rally real quick. Getting a lot of questions about it. Santa Claus rally. Last 5 days of the month, okay? Last 5 trading days of the month, first 2 trading days of the new year. So not weekends, not holidays. What I'm seeing on my screen, what I'm seeing on these charts, the reason I went and posted that short on the S&P and got that nice drop today, the reason I did that is because I think we're going to pull down. And if we pull down to key support level, I'm going to show you with Fibonacci, but mentally, a lot of you probably use moving averages, the 20 or the 50. If we can hold those 2 key support levels, I think you're going to rally back up in that time period. Why? Because of the euphoria in the marketplace. And again, it would be repeating exactly what we did did in 2021 going into 2022 for the S&P top. So pay attention to what the markets do here this week and next week. Maybe we get somewhat of a pull down here to those moving averages, to the key Fibonacci levels I'll show you on the charts. And if we can hold them, I expect the rebound back up. Again, we track in patterns, we track in fractals. There's nothing new in history that the market hasn't already done before. The key that we have to do, the detective work that we have to do, is to figure out what cycle we are tracking to the most accurately to make informed decisions about where we trade. So let's start off here on the YM. This is the Dow futures. Looking at this giant W pattern, pull our fib from 1 to 2. This is a leading indicator for the S&P. Look exactly what we hit, the 200% expansion, 45,029. The Dow is now at 44,592. Again, beginning to retrace some. It's going to find support. It's going to try to hold support. Wall Street is massively bullish. Over 80% of survey respondents expect this to be a soft landing in a bull market. They have targets. I think the average street target now is 65 to 6,800 for next year. Targets as high as 8,000. Tom Lee's talking about 15,000 for 2030. And of course, the Bitcoin targets are up there, 250K and more. Pay attention to this, guys. I mean, I love this. This is exactly how the GFC set up, with the same narratives over and over again on repeat. Let's look at this on the ES. This is S&P futures. Again, pulling our fib retracement tool from wave 1 to wave 2 of our W. 61.14. We got up to 61.11. So we got within $3 of 61.14. You're at 6,072. We're going to zoom into the daily to look at these, okay, to look at the support levels. But again, key resistance level, expecting retracement. Let's look at this on the Fibonacci pitchfork here. We got up to the 786, hit that beautifully, starting to retrace some on the ES. And if we go ahead to the daily time frame, take this off so you can see it. We go to the daily time frame. Let's go ahead and pull this out. Fib retracement from 1 to 2 of our W pattern, 6,092. Again, a target we have been talking about for months. We got up to 61.11, and now we started to retrace and come down. Not a big drop, but it's a free roll. Cost you nothing now, and you have 30, 40 points in profit, depending where you got in on this short, right? So if this continues to come down, what are the likely targets? Let's remove the fibs. So let's look at this first with Fibonacci. We're going to look at the up wave here in Fibonacci to the all-time high. Open this up so you guys can see it a little bit. Expand it, I should say. There we go. Now let's add the moving averages. Let's look at where the 50 is. The 50 is right at the 786, 59.09. Where's the 20? The two most tracked moving averages on algos and obviously retail traders. The 20 is right at 6,013, the 382 fib. So at a minimum, I think you're going to see the S&P this week and or next week come down to one of these two targets, come down to 6,000 or come down to that 5920 level, which is the 20 moving average and the 50 moving average. And if it can hold it, I would expect another staircase, right? So you come up, you come back down, you hold it, let's say the 618, and you come up again. God, that was awful drawing. But that's what we're looking at. So from a Fibonacci standpoint, we have our pattern targets on larger time frames, but we also have these more narrow targets that we can pull from these individual waves. Let me show you what I'm talking about. So when we look at this on the pattern targets, let's just go to this previous wave movement, which again is just right here, guys, the Trump pump, right? Trump pump, you came back down, your staircase pattern, then you go back up to the next level. So let's pull a fib. Let's pull a fib from that fractal high down to that low. Look what you hit, like almost to the dollar, 61.07, which is where you're retracing from, right? So again, you have Fibonacci confluence here. That next level up would be 61.75. But I want to see where this retracement goes. If we get some legs on the retracement, if we do drop to the 20, if we do drop to the 50, because then we can get a new Fibonacci pool to look at where the next staircase can lead to, okay? And from the 20 or just about the 20, you're looking at 61.72 to 6,200 in that range. And from the 50, you're looking at 62.33 if you got up to this 1618 to north of that at 6,300, depending how parabolic the Santa Claus rally could be. Or you could just be coming up to double top here, right? This is the fun and joys of trading. We're looking at expansion and contraction ratios utilizing natural law, which is nothing more than Fibonacci, showing you the projected movements of price. And we want to do this with confluence. So let's see where we get a drop to. Maybe tomorrow it's right back up at resistance again. But let's see if we get a continuation drop to the 20 at around 6,000 or down to that 5,900 level at around the 50. And it could play out over the course of the week. We have more data coming out with the CPI coming out. We have the Fed itself, I think December 18th. So lots of data. And again, the Santa rally, last 5 trading days of the year, first 2 of the following year, important to watch because of all the euphoria in the market. Now, right now, guys, just so you know, less than half the companies in the S&P are above the 20-day moving average. Again, all this money poured back into tech. You're seeing the money rotate from sector to sector. It's really interesting when you watch it, but you had the big tech rally late last week, right? So you have the market moving back up. So we're going to look at NVIDIA and Tesla as well in the charts today, but this is all key to understand. It's all key and important to watch. Understand your larger targets, these smaller targets, because when this thing turns, just like in 2022, the market doesn't go down in a staircase. It rises in a staircase, but in this case, I think the market's going to go down out the window. It's going to open the window. It's going to jump. That's what the market's going to do. Markets fall 3 to 5 times faster than they rise, which is why it's so key and so crucial and so important to try to find the area of max confluence for resistance, because everybody else on YouTube will just ask you questions on their thumbnails. They don't have a narrative, guys. They'll say, is this it? Is this a bear trap? What should I do now? Everything's a question because they don't understand what's happening in the marketplace. The only thing they all have in common is trying to sell you massively overpriced trading platforms that you can just learn from any single trading book out there, right? That's the only thing they have in common. Just understand that. It's a sales pitch to sell you something. You don't need any of that. I learned all of my TA from books. You can go read those 20 books that have that TA, put it all together and come up with what I have, or you can just join our community and you'll pick it up fast, or you can just watch these videos and a lot of you already have a good idea of how I trade. So this is how it should be for trading. Nothing should cost you thousands of dollars, especially when it's basic level learning that they offer. Okay. So let's look at this. Again, the bigger, broader pattern target here on the S&P is out here. 6,092, the next level up, 6,161. That's your bigger target level. And we can start getting these smaller target levels for confluence once we see what price is doing. If we continue to drop, if we pop back up and then sell back off again, we'll see what happens. Watch your 20, watch your 50. Looking at NASDAQ again, zoomed out view on the weekly, exceeding our balance line. 21,486 right now on NASDAQ. Strong move up, and now it's selling off some. We look at NASDAQ zoomed in on the daily, have a beautiful W pattern. Pull our fib from 3 to 4 here. Look at that. 200% expansion, 21,710. 21,710. What do we get to? 21,706. Within $4. This is beauty of Fibonacci. Within $4 on a $21,000 asset. And yes, you're just hovering here, but you are down 167 points today. You're hovering in this area. Where would the likely retracements be? Well, let's look at this with fibs, and we'll look at this as well with the moving averages, okay? So here's our fibs. 618 at 20,888, 786, 20,665. This is a daily time frame. Throw the 50 on there. It's right at the 786, 20,665. Throw the 20 on there. It's right at the 50% retracement, 21,044. So 21,000 and 20,665. Okay. Those are your two targets for the retracement. If we're going to have the Santa Claus rally, need to hold those two targets, one of those two targets, and then you get that next leg back up, right? Nothing more than, I'm just going to show you this just with an ABC, nothing more than the next leg going back up the staircase, right? You'll have the same thing up to the next level, and we'll pull targets on that when the time comes as well. So we'll look at that. Let's see how this retracement level plays out. Let's go ahead and move forward. We look at the DAX, how the DAX set up. 20,363. Little bit of geometric trading here on the DAX, looking for signal waves, matching waves. We have an 11.81% wave up, an 11.24% wave up, matching waves. We have an 8% wave up, an 8.74, and currently an 8.68. Notice the pattern of how the DAX moves. Now, after these 8% waves, 5.5% decline, nearly a 5% decline. What will the DAX most likely do if it hit key resistance up here? And we're going to look at this on the daily chart, looking for the DAX to decline just about 5%, between 4 and 5%, just like it did here, just like it did here. And we'll see how this lines up with fibs. I'll show you on the daily, but just to do it from here. On the fibs, the 5% decline takes you to 19,492. So 19,500 basically is the 618. Okay. Looking for that. The most commonly retraced to fib. Let's look at this on the daily. On the daily, how did we get our upside targets here? We have a beautiful Wyckoff fractal that formed. As you can see, we got on top of it, got our Livermore pivot. We can take this fractal high down to the fractal low. We got just above the 1618 to our 1.732 at 20,486. And of course, we're at 20,366 right now. If the US markets, we did get above our giant ABC as well, which was key. The DAX and now the NASDAQ, the only two markets that have done that, right? So now that we got up here, this is a topping range in this range. If the US markets start to sell off and retrace this week and or next week, look for the DAX to pull down and look for support as well. You have the ECB this week, I believe. They're expected to cut again as much as 50 basis points. You'll see how the community reacts to that. But again, the DAX targets, 19,492, 19,5. You can see that with the 50. I think your 20 is right on top of your 50. Let's throw a 20 on there. It is. So 19,686. So we'll call it 19,7 and 19,5. These two levels of retracement is what I'm looking for in the DAX over the next week or two. And of course, it doesn't have to do this. It could hold up in this range and start chopping sideways. So could the US markets just get some volatility up and down. And if it does that, again, I would be looking at that last 5 trading days, first 2 of the following year, for a Santa Claus rally to have some volatility. But this is stretched, and so are the US markets. You got overbought, momentum rolling over on the daily time frame. So looking for some sell-offs. Now, guys, you remember this on Bitcoin. I drew this months ago. I haven't touched it, right? The 3 peaks in a domed house. This is a George Lindsay pattern. Peak 1, peak 2, peak 3. The domed house is nothing more than a 5-wave pattern, which, as you guys mostly know, is a head and shoulders pattern. Look at that. Look how it grew into my drawing. Remember, I drew it when it was down here. Price was down here. So that's interesting. I'm going to have to adjust that because I think that peak could be 114. But I think this is how the pattern is going to complete. I think Bitcoin's going to get up there to that 114 level. And Bitcoin peaked, I think, in 2022 over here on the left side of the screen. Right around, where was it? December, not peaked, I should say, but for the Santa Claus rally in 2021, it rallied up to just the end of December and then sold off big. Okay. So just keep in mind, doesn't have to repeat that, but I would expect something similar if we get our run up to the 114. So I'll adjust this to make it nice and pretty, but I think it's really fascinating how this is playing out so far. As a matter of fact, when I drew this months ago, what did I have there as a target? 103,465. And of course, Bitcoin got up to 104.5. So I got 103.5, 104.5, drew that months ago. Really interesting to see that start to form like that. Bitcoin on the daily, here you are holding your 20, right? And again, just some basic TA. We go over this every video. Your low, higher low, retest it, higher low, still holding a higher low, still holding that 20, flirting around the 100K region. 114 does not look that far away, does it? So we hit the 104 beautifully right here. 114 is right up here. If you can hold the range, even if you retrace some, you want to keep this base around here, right around that 89K base, right? You want to keep this base, but even if you retrace some, these are your upper side, upper level targets. If in fact Santa does come this year and you get more euphoria in the market. And guys, just to be totally open, and I've said this many times, I would expect if the S&P and broader markets rally, especially the NASDAQ, because Bitcoin has up to a spot 93 correlation with the NASDAQ, which is an almost perfect correlation. I would expect if the broader markets rally at the end of the year after whatever this retracement is that they're starting now, if they do rally, look for Bitcoin to rally as well. And that 114 still remains the key level target for me for Bitcoin to get to. We look at Solana. Solana's chopping around in a range. Remember, when you retrace, guys, there's two different ways you can retrace. You can have actual retracements, which are sell-offs, right? Or you can sell off your high and start making the oscillators reset by chopping around in a range, eventually trying to turn bullish, get some higher lows, make your W, and come up to the upside, right? And that's what Solana is doing now. It's chopping around. You'd like to see it stay above 221. 210 was your previous high over here that you would like to definitely stay above, because the higher level you can stay and chop, the higher level you can have to go to the upside, if that's in fact what ends up happening. Obviously, you start breaking down from this lower fractal of 215, you come back into this range, that's danger time, right? That's just what it is. So it's going to be key to watch these things chop. Most of the altcoins are going to have very similar patterns, obviously, tracking the same, money flowing and rotating around the altcoins from whatever, RWA, AI, meme coins, over and over, and with Bitcoin dominance as well. So you just want to hold these ranges in these coins. Looking at Tesla, beautiful W pattern, right? Did Tesla hit any targets? Let's pull our fib from, let's pull our fib from 3 to 4. 1618, 398. What did Tesla get to? It got to 404.5. Now, the 1732 is 416.77. How jazzed would Tesla people on Reddit be if this thing came up to like 420, right? I know they'd be super excited to see that come to 420. But look at that beautiful hit right where it should hit, right at 398 at the 1618, currently at 384. You want to see Tesla do the same thing. Can it hold up in a range and chop around? Same with the indices, same with Bitcoin. If it can, and you get a year-end rally, you're going to have higher level targets. You can have 416, 459 as these upper level targets if you can hold a range, right? If you start breaking down, forming bearish patterns, that's bad. What about NVDA? We'll measure from 3 to 4 here as well. 1618, 149.99. You guys have seen this chart many times. Beautiful hit just above the 153. And now you're just in a range, right? So let's get rid of this fib, because you're stuck in a range here on NVIDIA, chopping around. Here's a high you can use, 149. Here's a low you can use, and you can isolate this and see it. Your low here at 137, price is at 139. NVIDIA is trying to coil, trying to hold a base, and the base will break one way or the other. It's going to break to the upside with some higher lows, or it's going to come up like it did here, make a lower high, and start descending from here, okay? This one stock this year responsible for 25% of the S&P rally. Previously said 25%, this one stock. Very important to watch what it's doing, and right now it's coiling and holding a base. All right, guys, hope you enjoyed the video. Be sure to like and subscribe. I will see you on the next one. Follow me on X. Check out our website. Talk to you guys soon.
Make a wish and